tracker am I to be like?
Well, about 7:35-ish, we'll try and do 30-30, you know, work on it.
Okay.
So. Thank you for everyone who is continuing to join us at this time. It is 7:05, so we're going to go ahead and get started because we want to be cognizant of your time and make sure that you get everything that you came here to get within this hour of the overview that we're going to provide for you. So thanks everyone for joining us from Chicago, from Florida, from wherever you are. We really appreciate it. So to get started, my name is Cherrise Wilks. I am the owner of Affinity Consulting Group and an education service called the Fund Finders. And I am here with my educational partner, Deanna Grant of Grant's Financial Services. And we are going to be offering a lot more classes in the future to help business owners and CEOs basically level up and be able to take their businesses to the next level by getting all paperwork in order, understanding what financial opportunities are available to you, and also just ensuring that you are equipped with the right strategies to enhance your businesses and grow in the future, because the goal of owning a business should be to grow. So we each will definitely introduce ourselves as we go through this presentation. And we want to go ahead and get kicked off and started so that everyone gets the information that they came here to receive today. Deanna, did you want to say any other additional words?
I just said, like, so yes, you're my educational partner, and we want to take all of you CEOs beyond the business basics. So we will have a series of, like she said, like educational webinars that will help you with maybe some of the foundational things that you didn't learn. If you're new, you'll do them before you need to. If you have an existing business, maybe 2 or 3 years, you've already been in business, we're gonna take you back to the basics so that you have that infrastructure to grow. And your goal should be to grow. I agree and concur with that. Awesome.
So just a couple of housekeeping items. Everyone is muted at the current moment, depending upon how many people we have who could actually come on board. We've got 43 people registered today. So we may go ahead and unmute everyone. Otherwise, with Zoom, there is an option for a Q&A section where you can click on that option on your menu bar, and you will be able to ask any questions to us. We may stop periodically and ask those, or wait to the end for the sake of time. We will launch some polling questions. I will go ahead and launch those because we would kind of like to know, want you to interact, and then also kind of know who we have as a part of our audience. And then there's also a Zoom webinar chat feature where you can talk to everyone in the audience. If you have an answer, you can certainly respond. We are experts in what we do, but we also don't know everything. And so we definitely like when people interact and share their knowledge as well with other business owners. So please do take advantage of these features of Zoom, and we look forward to teaching you and hope that you learn a lot from us today, or at least learn something new. So we will go ahead and kick it off with that. I'm going to go ahead and launch the polls for everyone to answer. So that option is over there for you, and I will go ahead and get started with the presentation. All right, so everyone is here to discuss the Eliminate Risk for Audit for PPP and EIDL. We are again going to teach you from our respective backgrounds what we know about these programs, and teach you some of the ways that we see people may be at risk for audit, or at risk of potentially not spending their funds appropriately. So we will talk about both of these programs in detail. I, Cherrise Wilks, am going to cover EIDL in a lot more detail, and Deanna will certainly touch on some things with EIDL, and she's also going to discuss PPP in detail, as her Grant's Financial Services is an accounting and tax accounting firm. So she is the expert with that. So our agenda today includes an overview. We're going to talk a little bit about PPP versus EIDL for your businesses. We're going to talk about where to find the EIDL rules that govern the entire program. We're going to talk about some contract clauses. Then we're going to get into PPP, which Deanna will cover, any accounting strategies that we can give you to help you win and be successful with spending these funds, and then also repaying them to the Department of Treasury and SBA. And then if you have any questions, we will certainly answer all of your questions as we move along. So why us? So again, my name as the first presenter is Cherrise Wilks. I am the owner of Affinity Consulting Group. We are a management consulting firm of 10 years. We are minority and women-owned certified. We have currently 6 associates. We have affiliate partnerships with other companies, community development, financial institutions, and gross sales into the mid 6 figures. Our value proposition is that we are credentialed professionals. We are credentialed grant professionals, contract managers. We are credentialed in emergency management and project and program management. Additionally, we care about our customers. We provide a service to you, but we don't just leave you with that service at the end. We establish a long-term relationship with you and make sure that you are poised for growth moving forward. We have a lot of long-term clients that keep coming back to us for business, hence why we have not necessarily had to advertise as much, and we're very, very thankful for that growth in the past 10 years. Additionally, we have a lot of government contracts as well, and we work with small businesses, some nonprofits, and educational institutions. So we do have experience at all levels of government, so federal, state, local, and again, the private and nonprofit areas as well. And to date, we have helped our clients either raise or generate revenue to the tune of $77 million. And we have also helped them on the project management side manage more than $300 million in funding, or we have helped them manage it directly. So finding resources is my personal mission and passion. That is my reason why I get up every morning. I enjoy money in a positive way, and I definitely want to teach other people to have a positive relationship with money and finances, and why it's beneficial to think of money in a positive way, because you can do a lot for your communities when you have the right resources. So our services include research, analytics, government and public administration, some training development, and business and economic development, to name a few. We have launched the Fund Finders, which you're going to see on quite a few of my slides. So the Fund Finders is going to be an education, training, and e-commerce platform that we are launching. And we have an academy opening up in the fall, which Deanna is a part of with our partnership. And she's going to be one of the experts who's going to be assisting me with teaching classes on a variety of topics, from grants, contracts, project management, other business advisory services, and financial services. All right, so let's get into it. So all of you are here because of the PPP program and the EIDL program. As you know, with COVID-19 and coronavirus, these 2 programs were implemented via the CARES Act. I do want to point out that the EIDL program has actually been around for a very, very long time. However, that particular loan or working capital program is typically offered to communities who suffer natural disasters during a hurricane or some other type of flooding disaster or things of that nature. So it isn't necessarily a brand new program, but coupled with that particular loan program, Congress also enacted the Paycheck Protection Program, and these are a couple of the different ways that these programs are used. So I do want to point out that EIDL is considered a working capital loan. There is a difference there. Paycheck protection can only be used for payroll and approved operating expenses. So they have very unique purposes, and you can actually have both of them. You can get both types of funding opportunities in addition to applying for grants and other resources. In terms of any collateral, which we're going to go into detail a little bit later, there's no collateral required for PPP. EIDL only requires collateral if you receive a loan over $25,000. And for forgiveness, EIDL has an advance, which many people have heard of as a grant. The advance is $1,000 per employee up to $10,000. So that is 10 employees. And you get that absolutely scot-free in terms of it being a grant or an advance, and it is forgiven. With PPP, they have changed the rules a little bit consistently, but with approval, you can actually receive forgiveness for that entire program or loan. And so Deanna will go over that in a little bit. The amounts for this, companies were able to receive over $10 million or up to $10 million for PPP. The EIDL was at least $2 million at a minimum. And the operating expenses can exceed $15,000 a month. One of the great things about both of these programs are the interest rates. You cannot beat these interest rates with a lot of financial institutions. EIDL has an interest rate of 2.75 for nonprofits, 3.75 for businesses. PPP, 1%. That type of interest is often unheard of. I can even attest to my own. I have different types of lending instruments, and oftentimes the interest rates are a lot more than that. So this is very positive. EIDL, I absolutely love that program because you've got up to 30 years to pay that off. And then with PPP, it's 2 years. So these are some generous opportunities to allow you the flexibility to stabilize your company during COVID-19, as well as opportunities to grow. And Deanna is going to give you a couple of strategies for that in terms of how you may be able to use these funds to grow in the future. All right, so glossing over this really quickly, EIDL has a couple of federal regulations that you can read in more detail. I listed them here. We can email this PowerPoint presentation out to everyone who has joined us today after this meeting so that you have this list of the regulations. And if you are so inclined and like to be studious, or I call myself a geek and actually go read this stuff, you can do that in your own time, and certainly reach back out to us and ask us questions if you see something in the regulations and you have a question about it. So each of the programs has their own set of federal regulations where you can read a lot more information on them to determine how to use those funds and what the best use is. So one of my lights went out, sorry about that. All right, so I'm going to go ahead and end the poll. And really quickly, just so we all know who is joining us today and what type of loans they have. Every attendee can view the poll results. So I asked the first question, which working capital loan do you have? You can choose both or either or. Over 62% of our audience today has an EIDL loan, which is pretty good. 15% has PPP, and there's 23% who has both. So congratulations to all of you who did get funding. We applaud you for applying and taking advantage of these opportunities and securing funding. Question number 2 said, did you apply for EIDL and only accept the $1,000 to $10,000? So 69% of you said you applied for that and you accepted it. 31% said no. And question number 3, are you still confused about accepting the loan? So quite a few of you are still in limbo with determining whether or not you should accept the loan. So hopefully today we will help dispel some of those myths and help you figure out if this loan working capital opportunity is the right one for you, because that's what we're here for. And then now that we know PPP was supposed to end on June 30th and it got an extension to August, we also wanted to know, did any of you plan to apply for PPP? So overwhelmingly, 62% said no, and then there's 38% that still plans to apply for PPP. So that's good as well. So let's keep moving on, talking about the EIDL program so that we can help you guys make a decision on whether or not you should accept this working capital program. So let's talk about what has happened. In terms of money provided out to small businesses within the US, as of May 31st, the SBA has provided 3.1 million in advances. That totals $10.2 billion that has gone out to small businesses. Businesses have gotten $1,000 up to $10,000 per employee. So the average advance size has been about $3,000. That means that there are a lot of businesses who have under 10 employees. Also, especially if it's on average about $3,000. So those were kind of interesting statistics that I found on this program today. In terms of loans that were approved, they have approved over 55 billion in working capital loans that have been approved, and those loans have gone out to 707,000 businesses. So the loans are, you know, in terms of looking at these numbers, a lot less people are accepting the loans, but they also are accepting loans at a larger rate. So the average loan size actually happens to be about $78,000 for most of the businesses who have accepted loans. So these were like some pretty interesting statistics. So let's talk about the contracts for EIDL. Most of you, in terms of your process for EIDL, you got a notification in your email. It said, please log into your SBA account, accept the advance and loan agreements, review your documents. So essentially you go into the system. It asks, do you want to accept the advance? You click yes. And then it also has an amount at the top that tells you how much you are eligible to receive for your working capital loan. What many of you may or may not know is that you actually have 2 months. If you looked at the contract, you got 2 months to decide if you want to accept those funds. If you do not accept it, you actually have an option to go into that document and click do not accept. I have seen online where people are like, oh, if I leave it sitting there, then that means I'm not going to accept the loan. We are recommending that you go ahead and formally decline accepting the loan or formally accept the loan. Once you do that, if you're going to accept the loan, you are going to get another email that provides you with a contract to be signed electronically via DocuSign. So you can literally sign the contract after you review it on your phone or from your computer. I certainly, again, I'm a certified contract manager. I read through that loan document before accepting those terms, but I definitely caution everyone to read through it thoroughly. We are giving you an overview today of the loan, some of the clauses that you want to pay attention to, but that is the process. Once you accept it, you can download a copy of your full loan agreement and keep that for your records. Within 2 days, the funding is in your business bank account. So it's there. All of it is there, is not dispersed to you in disbursements. The full amount is there and ready for you to spend. So some of the clauses that you need to pay attention to. In the loan document or working capital document for EIDL, there is a section that talks about collateral. Now, anyone who gets a loan approval amount for under $25,000, does not need to worry about collateral. They had this information on their website, but if you are going to accept an amount over $25,000, this means that you have to either give a personal guarantee or have some other assets available that are looked at as assets against the loan in the case that you default or do not pay off that loan. So they do have an entire paragraph, which I have shown here, that talks about collateral and what is required. So here it says, the borrower now owns or shall acquire acquisition of tangible and intangible personal property. And they list a couple of things: documents, letter of credit, accounts, receivables, deposit accounts, software, any of that type of stuff. These things can be considered as collateral. And I'm also going to show you another slide of common types of collateral that you may or may not need to use in terms of paying off your loan if it should come to that. I see we have a question that I wanted to just check really quick before we move past that. All right, so in the chat, it says, please address if one is denied the EIDL loan but got the EIDL advance. Are there any guidelines? The advance is yours. You do not have to repay that back. So it's independent of the working capital requirement.
I have something to just add to that. You can go back to the SBA if you got denied, and you can ask them to reconsider you. So you can email them and ask for a reconsideration. And then if that's a possibility, they'll send you a list of documentation that they need to support your reconsideration. But we've had a couple of clients that did that.
All right. The next question from Tracy: does your EIDL loan report on your personal credit report as a loan? Also, can you address the limitations on what the funds can be used for? SBA does pull your personal credit. In terms of them reporting it on your credit report, yes, they will, but I will tell you why they would do something like that. And then also, I do have a couple of slides on the limitations, and Deanna is also going to talk about that in detail as well. Anne says, what would cause a decline? I can tell you a lower credit score definitely does. In terms of unspoken underwriting criteria, it's usually if you have a credit score under, I believe it was 740 or 760. Deanna, do you have any other things to add to that?
No, I know that credit score is really key, but I will say there have been some people that wrote for reconsideration and then they were approved. So in this funding opportunity, you want to, I always say the funds are in the follow-up. Follow through. You don't get discouraged. You may be able to explain why you had that credit situation. And we've had some clients that actually sent for reconsideration and then were approved. But it's usually low credit score.
Also, another reason someone could be declined for this opportunity, let's say a couple of years ago, your business applied for SBA EIDL loan and you defaulted or haven't paid back or didn't pay it back on time, you will not be able to borrow any more money from the SBA. And I will talk about that at the end in terms of what happens with default.
I got one of those stories too.
Yes. So with that, we'll keep moving forward for the sake of time. Okay, Anne was like, she was a little under 700. So, and also, yes, Angela mentioned that criminal background can cause a decline as well. That is absolutely correct. If you have a felony, that can also cause a decline. Thanks for that, Angela. All right. So in terms of other types of collateral, I've got a little picture up here of what types of collateral could be considered if you have a loan over $25,000. It can be automobiles, valuables, collectibles that your business has purchased, also for personal as well. Have you purchased any machinery or equipment that has a value to it that can be sold or transferred? Insurance, cash accounts, or other types of investments can all be considered collateral against a SBA loan. What the loan documents also mention that you cannot do, especially if you have to have collateral for a loan over $25,000, you cannot transfer any of the collateral or the collateral that you are using against the loan. You cannot transfer that collateral. You can't give it to somebody as a gift. You cannot sell it to anyone without SBA written consent. So I'll give you an example of like common collateral that businesses may have. Maybe you've got a huge office printer from Xerox or whomever, and maybe it's a $5,000 printer that you are using for collateral. If you wanted to sell that later, you have to ask for written permission to do so, to take that off of your asset inventory. Also, you can only transfer during your normal inventory turnover. So if that printer, for instance, is at the end of its useful life and you want to donate it or give it away or whatever the case may be, I definitely recommend keeping documentation of that and even possibly going ahead and asking or seeking written clarification from SBA, just so that you have something in your documents that shows that you let them know and inform them that you were planning to get rid of that collateral, and then also documenting what you did with that collateral, so that in case you're audited and they come back later and ask, hey, where's this printer that you told us you were going to use against this loan, you've got all of your backup documentation to show what happened to it. So now we're going to talk about some of the common uses of your loan funding. So here is an exact clause out of the agreement. It says the borrower, which is you, will use all of the proceeds of this loan solely as working capital. It is to alleviate economic injury caused by the disaster occurring in January or as of January 31st or thereafter. So that means only cost or expenses occurring from January of this year up until now and moving forward is eligible. That means you cannot use these funds for stuff that happened prior to January 31st or things that occurred in 2019. Also, some of the common questions I've seen online, a lot of people were asking, oh, well, I had employees or contractors who were on board in January. Can I use it on that? Again, you cannot use it on purchases and payroll prior to January 31st. Also, another common thing that popped up is, can I use it on prior taxes owed from 2019? No, you cannot. Those expenses and any tax liability are owed for 2019, not your current fiscal year. So sole proprietors and single member LLCs have to remember that if you owe taxes and that is your structure, that tax liability is on your personal taxes, it's not a business tax. So that is a big distinction that a lot of business owners often have to have clarified, especially online in some of the SBA groups that I'm a part of. And it's a common question that is popping up right now because, as we know, taxes are due or to be filed on July 15th, or an extension is to be filed. So a lot of people are getting their paperwork done and they want to know, can they pay off their taxes with this loan or working capital? And the answer is no. So what are some normal business expenses that you can spend this money on? You can spend it on payroll. You can spend it on any personnel costs related to your business. Those are normal expenses that you were incurring prior to COVID-19. Insurance, general liability, professional, those are allowable expenses. Accounting, software fees, these are common normal business expenses that most businesses have, and you can spend your funds in that category. Equipment, printers, laptops, other equipment that is normal for the operation of your business, you can spend it on that. Professional services, having an accountant or a CPA is vitally important. We're going to go over why you need one of those professionals, and especially because you have this funding. Any tax advice that you may get, payroll processing, web graphic design. These are actually some of the questions I directly ask SBA, and then also you can be able to justify these expenses if you can show a history that these were normal business expenses for you. Any strategy. Let's say you want to do advertising, marketing, social media in order to help your company grow or advertise to a new audience because COVID-19 has impacted your ability to keep your doors open. Those are all normal business expenses. Any business plans, strategy development, stuff like that, you can have that stuff covered. If you want to pitch for a grant opportunity related to COVID-19 and you need someone to help you create a pitch deck or the content, again, normal business operations. Some of the other types of expenses, certifications, licensure, professional development, annual report filing fees, and other software costs. So this list is not exhaustive, but if you think about your own personal business, this gives you a way to think through what are all of my expenses. You can go back and look at your expense report and see some of the common things that you spend money on, or think about what your strategy and your plan is moving forward in lieu of COVID-19. And those would be common business expenses. So really quickly, I just want to check questions to make sure we don't miss anything. Is coaching an example of professional development? Yes, business coaching, it must be tied to what you are doing with your business. If you are trying to pivot with your business, let's say your business is started, your mission, all of your documentation says that you are a printing company, and then you want to do real estate now and try and pay for that fee. I would recommend that you do not pay for that with this working capital, because real estate may not tie into what you're doing with the printing business. So it needs to be something that is tied to your current business. A business coach, you know, that's helping you with strategy or whatever the case may be, as a printing company certainly could be a viable business expense. But don't go off the reservation, as they say, and, you know, do something way left field that doesn't tie into your current business. All right. So here are some other clauses. There is another clause within the contract that says you need to report compensation from other sources. Now, we all know that several businesses are applying for PPP, EIDL. There are grants and loans offered from your local government under the CARES Act or your county government. So there's money coming from there. There's money being offered by all of these corporations in the terms of like grants. All sorts of money is out here for businesses right now, and you may be applying for some of them and you actually may get some of them. So if you do receive any of these public-private sources, and maybe you filed an insurance claim against your general liability or your professional insurance, you are actually required to inform the SBA of any other funds that you have gotten for your business, so that they can double check and make sure that you do not have a duplication of benefits. What that means is you apply for this loan or working capital, PPP is okay, but then you went to your local county and got the same exact amount, and you're trying to spend the money from the county plus SBA on the exact same cost and submit the exact same paperwork. They want to make sure that you are not double dipping and receiving money twice from these entities. And that's what duplication of benefits means. You are required to let them know about all funding that you are getting for your business in the form of these other types of funding. The reason it's important, especially let's say like that county grant, that county money is coming from the CARES Act as well. It's coming from the Department of Treasury. So basically the federal government has paid for your business twice in layman's terms. They don't want to do that. So you got to make sure that you do not double dip, as they say, and cover the same costs and expenses under different programs. Also, one of the other clauses is if you did not have insurance, if you have a loan of $25,000 or more, you must get hazard insurance. That covers fire, lightning, extended coverage, and coverage on any of the items to secure your loan or any items that you are purchasing under this loan. That's important because of the simple fact that, hey, technically the federal government is paying for your equipment. If that's what you're going to use the funds for, they want to make sure that if another disaster occurs in the form of this type, that you have insurance that's going to cover the cost of the replacement of that equipment. So they require you to have insurance, and you will have to contact a company such as Hiscox, or there's Hartford, or any of the other business insurance companies, and get a policy if you do not have one. So please make sure that you keep that in mind. All right, we've got a couple more questions. Let's see. Trayvon says, are you guaranteed to get the approved amount they said you're eligible for? My understanding from clients that I've had and colleagues is that the amount that they list in your portal is the amount that you're going to get. So they have already done a preliminary underwriting assessment, and it's pretty much the set amount. So I wouldn't worry about them changing that unless you take maybe a month or two to accept it and something changes, I don't know, with your credit score, or something changes within that time frame that would be maybe derogatory in terms of like looking at your underwriting criteria. So again, it's best if you know that you want to accept the loan to go ahead and accept it quickly versus letting it sit there and wait for 2 months, because you don't want anything to impact what you're going to get. Let's see. Anne says, I have a cleaning service and I give gift cards to cleaners such as massages. Is that okay? You were doing that prior to the EIDL loan. I will go over another slide and I'm going to say no to that. Deanna can.
I said yes. I said yes. It's okay. I said yes. It's okay.
Yeah.
Because it's like she's doing it like marketing expenses. She's doing it like marketing. She's giving gift cards to customers. Like,
no, it's to her cleaners, her employees. Like they're.
Oh, that's what she said?
Yeah. And can you said cleaners, do they work for you? Are they 1099 contractors or employees? Yes, they're 1099s and employees. So it's like a bonus to them.
I think bonuses are supposed to be reported like as compensation, but she asked, could she still do it?
Yes, so we can go over that. Yeah, as long as you report it, that would be the case. So let's go over that because I actually do have that clause pulled out, and we can certainly.
And it's 643.
Oh, I'm so sorry. I'm gonna hurry up then because Deanna has to go. All right. So other requirements that you guys have to pay attention to: loan proceeds and receipts. You have to keep itemized receipts. Also copies of those, and if anything happens, you definitely need to get prior written approval. If your business changes addresses, relocates to a new building, or out of your home office, for instance, you got to report all of that to SBA. So you got to get something in writing from them. One of the other things I will point out is if you are buying equipment of any type, laptops, whatever, printers, any of that type of stuff. To the extent feasible, you want to make sure that you purchase American-made equipment. That is a clause, Buy American. You may have heard of that. Those are clauses that have been put in most loan documents as well as grants for anybody who receives those funds. And the way that you do that is you can document your search, get quotes from vendors where you request something in writing from them, asking them where your products made, and try to the best of your ability to purchase something that was actually made here in America. So make sure that you pay attention to that. So Deanna's going to go over this in detail, but this talks about your bookkeeping and your records. Please be aware, you have to keep records 3 years after this loan is paid in full. Yeah. So if you don't pay it off for 30 years, you got to keep your records for 33 years. Be audited for up to 33 years. Hence why you should not extend this and pay it out for 33 years. If you can do it in 5 and make that money back, then do it in 5 or less. But we do not recommend that you do not keep good records during this entire process. Deanna's going to talk about separate bank accounts and why you need one. You need to have a good filing system, both electronic and in hard copy. Get you a filing cabinet that is fire safe with a key. Keep your stuff in there. You need to have an electronic accounting system. If you do not use QuickBooks, FreshBooks, Xero, any of these software systems, we are going to recommend that you get those. And then you also have to provide an accounts review report if requested from SBA. Some of the things that they want you to keep: operating statements, insurance policies, all of your tax returns. So make sure that you file those on time, because if you are behind for 2 years and they ask you for an audit, you don't want that to be you. So make sure that you have these things filed on time. If you know that you are not going to get these things filed on time, and you don't want the hassle of keeping up with this paperwork or having a bookkeeper do it or someone, this may not be the right product for you. But if it is, it's a wonderful benefit for you to be able to expand your business. So what if you default? There are civil and criminal penalties. I know all of you guys have seen people in the news buying cars, doing all sorts of stuff with this money that they should not be doing. That is a big no-no. They should have read their contract and they should have looked up these clauses, or they should have contacted some people like us, because we would have told them, don't do that. That's not normal. And you can't justify that. So don't use the money on that type of stuff. You will have a blemish on your personal and your business credit score. So you do not want to do that, because it affects your ability to borrow in the future, and you will have high interest rates, which is a detriment to your business. It will take over your profits that you have or any revenue that you get. They will seize your personal assets. Same thing, like if you default on student loans or you owe back taxes, any of that type of stuff, this loan does the same thing. If you were supposed to get a tax return, they will take that. So basically, don't default on an SBA loan. It looks bad. Financial institutions will also typically bar you from borrowing money, and you just don't want that. So make sure that you talk to professionals. We're telling you our professional recommendations. You can certainly ask us questions afterwards. And
I have a story. I'm gonna share it quickly.
All right, go ahead. So
it's a client, and client of ours, business has soared past 7 figures at this point. And I don't know what happened in the blah, blah, blah of future past, but there was a loan with the SBA. The total was $10,000, 10K. That's all the loan was, but it was defaulted on back, I don't know, 10 years ago. Here comes PPP. And we know PPP has a forgivable portion to it. Here comes PPP. His natural payroll is about 300K, naturally. Take that divided by 2.5, blah, blah, blah. He probably would have gotten about a $200,000 PPP forgivable loan. But because he owed the SBA 10K, no PPP. So you want to just be responsible, because you never know what will happen. Like, we never expected COVID to happen, and you just never know. So you want to be responsible with this loan money. And there's so many things that could happen from they're taking your tax returns to like your personal assets and just everything. So if you take this funding, you want to be responsible with it.
All right. So like I said, we will email this out. It has our contact information on it, but I want to go ahead and get started with Deanna's information.
Okay. So I can share my screen.
Share that. Yep. In the meantime, while you're doing your share screen, we did get in a couple of more questions. Octavia said, can I go back in and change my loan acceptance amount if I accepted an amount over $25,000? Yes, you can contact SBA. I would recommend waiting on the phone and contacting them and letting them know that you want to change your loan amount. They can decrease it. Obviously, they won't increase it, but you have the option to do that. Latoya says, are there any auditings done with these loans, even with the forgivable advance? We did that, so that was no. Someone said, can you expand, do a build out? I am going to make an assumption by build out, you mean, can you use the funds for like architectural drawings or any type of construction? The answer is no. Because you are more than likely either doing that on a lease space or on a building that you own. It has to be working capital that is used for your normal business operation, not for construction or that type. So I do have a client who actually called SBA because she was trying to do the same thing and set up a new location, and they told her she could not use the money for that.
Okay, is my screen, you can see the screen share?
It is, you were good to go.
All right, okay, everyone. My name is Deanna Grant. I'm the owner of Grant's Financial Services, and I'm gonna talk about how to stay out of financial trouble with the EIDL and PPP. I wanted to tell you a little bit about myself. I support, I empower, I believe in empowering and educate women entrepreneurs as well as people of color to get to their first million in gross revenues, so they can make a difference in their lives, their businesses, their family, generational wealth, and their communities. But we support businesses from their first dollar to emerging. So we have a lot of services, whether it's just a simple consult, a pick my brain consult, or a PPP consult, or et cetera, tax return, tax advisory session. We have a lot of little siloed services that can support you while you are growing your business until you are ready for that monthly retainer. So, so I want to say, show me the money, show me the money. That's one of my favorite movies, the Jerry Maguire movie. We're getting this loan funding. And Cherrise talked about the difference between the Paychecks Protection Program and Economic Injury Disaster Loan. But the only thing I want to say about this slide is that this is cheap money. Of course, I've been an accountant for actually over 20 years. I've had my own practice for 10 years. And I have worked with our people. I want to say that I work exclusively with our people. We've had to almost give our firstborn child to loan. It's been incredibly hard and difficult to have access to capital for us. So this is the first time, like, I've been so excited, almost like Oprah Winfrey, like, you get a loan, you get a loan, you get a loan. Because my clients are able to get money. And guess what? Capital is needed to grow your business. They always say it takes money to make money. The difference is, if you take this money, we need you to be responsible with it. This money is not to take to pay off your personal debt, of course, because they even say that in the rules. It's to grow your business. So free money, but I wanted to talk about what does trouble look like. These guys look like they're in trouble with the free money. This is not just free money to just, to go and buy things that you should not buy, or personal things. Like, I just wanted to tell you, what does trouble look like? So we remember this guy, I think he was in Atlanta, and I don't know, I just know he got locked up because he went and bought like some Bentleys and a whole bunch of stuff with his PPP money that he
hip hop
purchased. Yeah. So Trouble looks like him. Trouble looks like buying this nice new car with that funding. I heard the feds are coming to your house because they're watching these bank accounts. And Trouble, unfortunately, at the end, criminal charges could be brought upon you if you do not do right by this funding. So I wanted to say, let's talk about the numbers, and I want to give you a little lesson in accounting. You guys know I'm an accountant. I just want to give you a little lesson. So what can the economic injury disaster loan funds be used for? So they can be used for rent, payroll, and fixed debts, your accounts payable, and some bills that could have not been paid had the disaster not occurred. So that's what they can be used for. What they can, economic injury disaster loan should be used for working capital and operating expenses, which Cherrise, she explained, but I want to just go into the definition of it. What is working capital? So working capital is the capital of a business which is used for its day-to-day operations, calculated as current assets minus the current liabilities. But it's basically capital that you utilize for the day-to-day operations. What is an operating expense? Operating expenses are normal business expenses. When I talk about taxes, I say, everyone always asks me, what can I write off? What can I write off? Well, you can write off what is ordinary and necessary for your business. So I know Cherrise had that lovely graphic thing of all the different things that you can write off for operating expenses, but it includes equipment, marketing, payroll, insurance, research and development, and etc. So that's what the funds can be used on. So now I want to talk about what you're not going to use the funds on. What are you not going to use the funds on? So you cannot use it to pay any dividends or bonuses, disbursements to owners, partners, officers, except for if it's directly related to the performance of services. You cannot use it to expand your facility. And I'm going to go back to number 2 about using it for the disbursement to owners, partners, officers as it relates to performance of services. We'll go back to that. But you cannot use it for expansion of your facility, acquisition of fixed assets. Fixed assets are like assets that can be utilized over more than a year term. So for example, like Cherrise said, a large, if you're a design company and you purchase a large piece of machinery, I would say maybe it costs $5,000 that can be used 5 years or more. That's an example of a fixed asset. You cannot do it to repair or replace physical damages, cannot use it to refinance your long-term debt or to pay down other debt or loans.
Deanna, can we pause right there for a second? Because I want to go back to Ann's question about the gift cards with massages. That one I feel can be open to interpretation a little bit with auditors. It may depend if you're audited and who comes to see you. They can look at that as a bonus and a gift.
Yeah, that's why I said yes. I find it's immaterial. I don't know how many
I wouldn't do it. But you might get an auditor who
but this is what I want to say, because what we're going to talk about is the strategy. Yes. Well, what else could you, because maybe there's all these rules on what you can't spend this money on. Mm-hmm. We want to talk strategy after I get through just what you can't use it on. But like payment of any penalty resulting from non-compliance, contractors, I can't even say that word, I'm sorry, and relocation. You cannot use it for those things. And that's mainly because the economic injury disaster loan funds are used to support, I guess, you in whatever state and city you're at. And if you take the money and you run and go away, then you're not helping to build the economy in the state that you're at. So that's why you cannot use it to relocate. Then this is actually from the actual economic injury disaster loan doc. And I was so super excited to see this, even though, like, I know, like, you have to read that contract, but part of the contract said that you had to have books and records. A lot of small business owners do not like to keep proper books and records. So I was very excited to know that if you sign that loan doc, you must keep proper books and records. You have to maintain them, like you said, 3 years. If you wait till 30 years to pay this loan off, you got to hold those records 33 years. But it's a requirement to have books and records. Why should you keep good books and records? Just because you should have financial order in your business. You actually should want to do it whether you have the loan or not, but specifically because if you take these funds, you should keep good books and records so that if they audit you or if they ask you to send them a report, then you will have the appropriate information and you're not digging, you're not going crazy trying to find the information. This is just an example of, I just hope that your books and records just don't look like this. And honestly, even with this loan, I don't even want them to be in envelopes like that. I really want you to use a computer system. But why should you keep good books and records? Honestly, before COVID, before PPP, before EIDL, Economic Entry Disaster Loan, the IRS said you must keep good books and records. If you have a business, it's been a requirement. But why does that help you? You can monitor the progress of your business. You can now prepare financial statements. You can identify your income sources. You can prepare your tax returns. You can get your tax returns prepared on time. Tax returns. But honestly, good books and records help you increase the likelihood of business success. So it just helps you to have business success. I wanted to point out for those, because of this books and records requirement, I wanted to point out some of the softwares that you could utilize for books and records, like QuickBooks Online, Xero, FreshBooks, and then there's something called Expensify. It at least captures your expenses. It's a free app you can download to your cell phone. It's pretty cool. You can do receipt capture, which means you can take your little cell phone, take a copy of the receipt, and then it kind of like codifies it for you. So it's better than nothing, but I definitely think you need to get an accounting software system, specifically if you took these funds.
And I did want to point out on one of my slides, quite a few of the software for small businesses. I actually have a guide where you can text the number and you'll be able to download the guide. And it is a 2020 small business app guide where I list my favorite apps and those of my colleagues that help you basically be efficient with your business and be able to capture a lot of this information that Deanna is speaking of. Quite a few of the software that she's mentioning, they're also mentioned in the guide. So you guys will see that when we email that back out. But she is so right.
Yes, but I'm gonna tell you my favorite one.
We got the same one.
My favorite for my clients that we use in my practice, we like QuickBooks Online. A lot of our e-commerce clients use Xero, and then I like FreshBooks for consultants. That's pretty cool. But my favorite is QuickBooks Online. But the guide would have all of them. The point is, please get a software system. And then these are my 3 favorite payroll companies. Can you do payroll in QuickBooks? Sure. Can you try to DIY your payroll? Sure. However, the PPP and the Economic Disaster Loan, they're asking for proper books and records and payroll. What I know about small business owners after working with over, I don't know, hundreds of small business owners annually, that payroll, DIY payroll goes the wrong way. We have late filing of the payroll returns. We have non-compliance, not filing all of the required documents, because there's 941, IL 941, UC3, 940. There's a lot of compliance forms involved with payroll. I suggest you get a payroll system. My favorite at this current time is Gusto, because it's online, they have a tech savvy, and it's user friendly, and it's economical. And that's what I wanted to say about payroll. So I suggest that you get an accounting system. I suggest that you get a payroll provider. And or we also in our practice, we do bookkeeping and accounting. So you could utilize us as well. But if you're not quite ready for a firm to do your books and records, then at minimum, especially if you took this funding, then I believe you should get a software system, and then you should get a software system and have an accountant, CPA, whoever review your DIY at least once or twice a year. But let's talk about strategy, because we talked about all the stuff that that you can do with this money. Then we talked about all the stuff that you can't do with the money. Well, what are some ways, or I want to find a way to kind of shift your mindset about how to use this money. So one thing I want to say was, I believe that this is my recommendation as an accountant, that you should, especially with that the economic injury disaster loan money, that should go into a separate bank account. I just feel like the main uses where it's like payroll, your operating costs, payroll, the marketing costs, all of that can be paid from one siloed account, and then it can be tracked in your accounting system. And that way, if they ask for that report, Cherrise, what was the name of the report?
It was a audited financial report.
Yeah.
Accounting financial report.
Yeah, so if they ask for the accounting financial report, you actually can pull the register for that, for actually that one bank account, because what happens here is you got other money. This, like, we're borrowing their money, but really we should be taking their money to make more money. The reason that you access capital and you want to access capital in your business is to grow the business. You utilize the funds to make more money. So if you take this loan, honestly, you should have a short plan. You can even get a strategy session with someone, but you should take these funds, come up with a plan, whether that's a marketing strategy, whether that's getting with that business coach, whether that's getting with the accountant, whether that's getting with Cherrise, and getting grant funding and all those other opportunities that she has access and knowledge about, and consulting knowledge, to help you come up with a plan to make more money, because profits are everything. Honestly, in your business, you should be making profits. So if we take this money and just say we do a marketing campaign, we should take the money, process a marketing campaign to make more money. And of course, if that loan money is in a separate account, then you take that loan money and you utilize it for those minimized reasons that they told you can use it for. So you can use it to pay your rent, you can use it to pay your payroll, you can use it to pay your marketing, you can use it to pay your professional development. But if there's anything else that you need, like your fixed assets, and you want to purchase a vehicle, I'm not saying use the economic injury disaster loan money or use PPP. I didn't say use that. I said you can use the profit in your business, because really you are in business to make money. So that working capital should be used to make money. Now I want to tell you a little story. I'm calling her Savvy Sally. Now we know that's Nia Long, but hey. She's Savvy Sally today. And she's the owner of a successful multiple six-figure business, but Sally likes strategy. Sally likes strategy. So Sally takes her economic injury disaster loan fund, and because she is a service provider of her own business, she's going to pay herself a salary for services. Guess what? That was one of the useful uses that you can use the economic injury disaster loan for. Because sometimes as business owners, and I will say I've done it myself, I have not paid myself. Now, I do believe in profit first. Now I'm a little bit more seasoned, but I went years and did not pay myself, or pay myself last. Well, if you get this funding, you can pay yourself a salary. And then, because a lot of people are asking, well, can I pay off my personal debt? Can I do this? I still believe that the money that you use should help you make more money. But as a business owner, you should pay yourself, because when we can't pay our own rent, our own mortgages, and we're behind on our personal bills, then it just doesn't feel good. So now you could have a consistent salary. Now, I would be conservative and consistent. I would not sit up here and pay myself $6,000, $7,000. I believe you should pay yourself reasonable compensation. So one, what I would go to, like, what is it? it's not like LinkedIn, but one of the, you can like Google Robert Half, you can Google what would a person in your position actually get paid? What would the salary be for the person for your job that you do in your business? What is that compensation for that job? You can Google that on Google. I know that for sure. And then that's how much you could pay yourself annually. But that is one of the uses of the Economic Injury Disaster Loan Fund. You can use it. But I wanted to go back to Savvy Sally. She understands that having her working capital loan, economic injury disaster loan money, and that this is I don't want to say a once in a lifetime opportunity, but this is cheap money. Usually working capital, sometimes when we use those secondary market loans, that PayPal loan, Fundera loan, Lendio loans, Square Capital loans, when we use those loans, that stuff costs us 25 cents on the dollar. The interest kills us. The interest is taking our profit. This money is cheaper, but you have to be responsible with it and you have to do right with it. And I need you to, see a coach, strategist, accountant, CPA, tax accountant, consultant, business coach. And really you should get a strategy. If you're going to decide to take the money, make a decision, make up your mind, take the money, read the loan doc, but then let's come up with a strategy, because when you have money and capital, you are to utilize it to make more money. Okay, now that's my story. And I just wanted to say about financial numbers are important. You want to always track your income, track your expenses. You should always know what your net profit is. And that's what I want to say. Now we want to talk about PPP forgiveness. I don't have very much time, but I'm going to run through PPP forgiveness because that also is a trending topic. They recently extended the application to apply for PPP till August 8th, but now we're coming upon PPP forgiveness, and the new rules are that the forgiveness can now last, instead of 8 weeks, it's 24 weeks. The PPP money can be used for payroll, mortgage interest, rent, and utilities. So that's what you can use the PPP money for. And when you use the money for payroll, mortgage interest, rent, and utilities, now your PPP, Paycheck Protection Program money, can be forgiven, which is what we all want. But there's a process for it to be forgiven. So one thing is you have to utilize the PPP money in the following manner: payroll, mortgage interest, rent, utilities. That's one way to get it forgiven. The second thing is now you're going to have to fill out an application for forgiveness. But the forgiveness now is 24. The new updates are the forgiveness is 24 weeks of coverage. There, instead of it being 75, I just want to say the new rules are 60% needs to be spent on payroll, 40% for the other eligible expenses. There's a staffing requirement, like you had to maintain your number of employees. And then there's a record keeping and required required documents for forgiveness. So
yeah. Can we pause right there for a second? Kind of talking about payroll costs. We do have a question from one of our members. They are an LLC. So they said, how do they pay themselves a salary as the owner of an LLC business?
Okay, so to me, that's a really good question. As the owner of an LLC business, especially a single member LLC or LLC business and or a sole proprietor, then normally you take draws. That's what normally happens. You just take a draw. Okay, there are two forgiveness forms. There's one for self-employed, and then there's one for just the long form. This is kind of what I recommend, and I'm recommending this, and I feel good about recommending this. I think that you should get on payroll. I think that you should process payroll. I understand the tax laws and tax rules for LLCs and sole proprietor, but for the simplicity of forgiveness, when they ask for forgiveness documents, this is my next slide. Some of the documentation for forgiveness includes payroll records from your payroll provider, payroll tax filings, income payroll, unemployment insurance filings. The forgiveness paperwork is payroll compliance reports. I understand tax law. I understand you normally pay yourself a draw. I feel like for simplicity and the fact that the SBA and this money, there were so many different rules on how you can get the money, and they kept changing the rules, that the forgiveness application asks for payroll records, payroll tax filings. That to me, go ahead and process payroll, even if it's just for 8 weeks. I feel like that is going to be your, I want to say low hanging fruit. Is going to be the easiest way to get your entire loan forgiven, no questions asked. Other than that, I think you're going to be subject to more scrutiny, and that's my advice and recommendation. Any other questions?
Mm-mm.
Okay, my last 2 slides are, the PPP has 2 forms. There's a easy form, 3508EZ, and then there is the longer form, the 3508 long form. So the PPP forgiveness, there's a calculation form, there's a Schedule A, there's a borrowed demographic information form. Long story short, to me, it's almost like a tax return. Our firm, we are processing PPP loan forgiveness consults. So that is available. You don't have to work your brain or try to come up with it. But like I said, I do recommend that you sign up for a payroll service, even if it's for a limited amount of time, just so that you have the easiest paperwork and you have the easiest and best chance to get your complete loan forgiven, because we took the PPP money to not pay it back. We don't want it to convert to a loan, because if they review your file, and I wanted to say, because I'm talking to some of my accounting and CPA associates, so some of my CPA associates, the banks are hiring them to audit, I don't want to say audit, but to review these applications. So what happened when you got the loan, and then honestly, because I saw a whole bunch of stuff, I don't want to say funny business, I saw a bunch of ways people were able to obtain the PPP loan, and that's none of my business. But for it to be forgiven, you're going to have to follow the rules, and the banks are hiring, they're like posseing up so that they have the proper people in place to review these loan docs. So it's going to be very important that you have the correct paperwork, and you do not want to have any reason for them to deny your loan forgiveness. And I found a calculator. So if you go to nav.com, so www.nav.com, there's a loan forgiveness calculator, and it's free, and you can pop your numbers in there, and they could calculate how much of the loan will get forgiven. But if you follow my little trick, I can't guarantee, but I believe strongly that your loan would get forgiven. Also, hire a good accountant. That's always a good tip. Financial information helps a business owner to make good informed decisions, and tax planning equals tax savings, and you find the write-offs that you didn't know about, which puts more dollars into your pocket. And that's me. I'm on Instagram as the Tax Boss Lady. Please follow me. And I have a loan consult. So it's bit.ly SBA loan consultation. If you wanted to sign up for that PPP forgiveness, then if you go to this link, I think it's bit.ly, that's what people are saying, bit.ly SBA loan consultation, then you could actually sign up for our consult, because we want to help you get this money forgiven. We don't want you to pay it back. And do we take questions, or that's it for me?
I'm sorry, my little dog is starting to bark. He's like, you've been in here long enough. So if you guys have any last minute questions, please ask them of us now. Otherwise, I'm going to go ahead and launch the last poll, which is basically, how did we do? Did you learn something today? So please let us know. Otherwise, if you don't have any questions, or if we don't see anything come in the next couple of minutes, we will, like I said, certainly email the participants a copy of our slide deck for you. Our contact information is on there, as well as ways to get in contact with us at any freebies that you can access. And yeah, that is our overview for the night, and we hope it has helped a lot of you make a decision about accepting these funds. Yes, there is tracking. Yes, there are things that you have to do, but due to small businesses not being able to access capital a lot, this is certainly a way for you to access capital more easily. And any form of capital that you have honestly comes with requirements. It's not free money. So we certainly hope that you accept it and use it wisely for yourself and for your business, so that you can expand and grow, especially during COVID-19, as we know a lot of people are kind of holding on to their purse strings and not spending money or altering their behaviors, which will possibly be long-term. This is going to last for a year or two. So we want to make sure that your businesses are thriving and surviving. So yes, definitely. Thank you guys for joining us. And yeah, thanks for attending. Have a good night.
Thank you, everyone. Have a good
Bye.
night. Bye-bye.